In this video, I will show you my complete strategy on how I earn money almost every day using the Hedge Ninja trading robot for MetaTrader 5 to trade forex, commodities, metals, stock indices or anything you want. I use this strategy on my own funded account as well as an FTMO. For you who don't know me, my name is Robert Billy. I'm a full-time trader and robot builder. I have created hundreds of trading robots and tools over the years. One of them is Hedge Ninja. Hedge Ninja is a trading robot that uses a strategy known as win every time. Basically, it uses a hedging strategy so it follows the price. So each time your stop loss would normally be hit, it instead closes the trade and changes the direction. So if your first position was a buy, it closes at the stop loss and immediately opens a sell position with a slightly higher lot size to compensate for the closed losses. If you want to learn more about the Hedge Ninja, take a look at this video up here. I'm gonna walk you through my strategy and the process I use to enter my trades. First of all, here are my trading rules. Trading hours. I'm only allowed to open trades in London Open between 8 and 9:30 Central European Time and in New York Open between 1400 and 1600 Central European Time. The reason for this is that I want volume in the market so that the market is more likely to move a lot. As long as the price moves in any direction when I open my trade, I will win. Entry criteria. The danger with this strategy is when the market moves sideways, also known as consolidation. Therefore, I want the price to break out from consolidations and have clean air to the left. This is to minimize the risk of entering a consolidation zone and unnecessary drawdown. So if the price has consolidated all morning before London opens and then breaks out, is ideal. I will show some charts in a minute. ADR, average daily range. I use the ADR to decide on where my target should be. On my intraday trades, I want the trades to be able to close today. Therefore, I must make sure that my targets, both the upper and the lower, are within the ADR high and low to have a high probability of closing today, as the price will most likely not go further than these lines. I want to avoid market rollers, especially if I'm close to my hedge zone, because the spread gets wider and it can ruin my trade completely, and the robot keeps opening new trades every second until my max drawdown is reached. Trust me, I've done this. As my hedge size, I use around 10% of the average daily range. Target size. I often choose a 4 to 6 times bigger target than my hedge size. This is to ensure the lowest possible drawdown, and the higher risk to reward I have, the lower drawdown we have for each time we change direction to follow the price. As an example, with a 1 to 5 risk to reward, each time we open a new trade in the opposite direction, the lot size increases by a fifth. So if the first position was 5 lots, the next will be 5 multiplied by 1.2, which is 6. Then the next 6 multiplied with 1.2, which is 7.2, and so on. So the higher risk to reward, the slower we increase the lot size. But also, the lower the hedge distance, the more often the Hedge Ninja will open new trades in the opposite direction. So ideally, I want to enter before the price has moved too much of ADR to be able to have a 10% hedge distance and a 4 to 6 times bigger target that is within the ADR high and low. Closing trades manually. This is a very important part of my trading plan. If the price moves quickly towards my take profit and I see the price slows down, I expect a retracement, as the price very rarely moves in a straight line. So if I open a trade and it moves to like 60 or 70% of my take profit within the first 10 to 15 minutes, I often close and take the profit, instead of sitting in the trade for several hours to squeeze the last profits from the trade. Another very important thing is that if my trades do not go to my target at the first position and the Hedge Ninja changes direction, opening 2 to 3 positions, I always look to get out a break even or even a little profit. This is to minimize my risk in each trade, as the number of changes in direction is limited. Therefore, I always want to reduce my risk before taking profits, and this has served me very well. Chart time. Okay, let's show a few charts on how I analyze the market before opening my trades. But before I do, please hit that like button if you like this video so far, and subscribe if you're new to my channel so you don't miss out on any of my videos. Okay, this is how I do it in morning. I start with, for instance, GBP, JPY, because it's a good pair. We're coming from the Asian session, which is the JPY pair, and we come into London session, which is GBP. So what I do is, now we see here I do in replay mode, just to show you how I do my analysis and how I did this morning. I see 7 o'clock now, so I'm waiting for the price to break above this, because here we have clean air and clean range to the left. Below here we have a rather messy price action, so I would not look at this to trade it lower. I would maybe trade it like this. But as this is, the white lines here are the ADR low and this white line is the ADR high, so we can expect the price not to move all the way down here. So if we move further down, I will not take a trade here. I will only look for the price to move up. So what I do now is I will wait. Now it's 9 o'clock because this 1 hour candle is 8 o'clock and it has now closed. So here, this is a signal for me to go buy, to start a long position, because we can hopefully expect the price to continue move up. So what I would do then is I come to my MetaTrader. We had this price here was, this new candle here, this candle here would be a buy position. I attach my Hedge Ninja to it. I do normally enter a 0 in the hedge distance. It takes the default value then, which is 10% of the average daily range. But I actually lower this range today, just slightly. But this is around 10%. I use around 10%. Then I had a 1 to 6 risk to reward, which is up here. So I enter a trade, and this would be a perfect trade, obviously, looking now in hindsight. But if you want to use the default values, then you do 0. Sometimes you need to do it multiple times if it ticks just when you enter. And you do 0 on target, then it's 1 to 3. That's the default settings for risk to reward. And I use 1%, and normally I use 0 here, and 1% as target and 2% max drawdown. And I enter the trade. So if I would, I did take this trade on another account, but I closed it up here because it, as I said, it moves straight to my target. So I closed it around this area when I saw it slow down. So I got around 60% of my target, which was nice. If I would have held it, it would have taken my full take profit, which would be even more nice. But it is what it is. Moving on to my next trade. This is how I would look at this. Euro JPY. Also, Euro is in the London and the JPY is in the Asian session. So we can expect some movement here. And we have also seen this price action where it has consolidated but slightly up. Same here. I look at this price action. If we go up, clean air here to the left, which I prefer. And down here we have quite messy price action. So I would like, if the price went up here, then I would enter a buy position. And if it's a fake out and it moves down, I mean, we have the hedge trading strategy, so we can win anyway. But we always want to try to enter a trade in the right direction. We don't just enter blindly. We need to have some thought about where the price is gonna go. But if we are wrong, we can win anyway. That's the beauty of it. So we have this price action here, and it's 7 o'clock, and I do not enter before 8 to 9:30. And we see here the price moved here. Now it's 8 o'clock, so now we're in the 9th hour. We move forward. If the price went above here, I would have entered a long position. Now I can't do that because I move forward 1 hour candle at a time. So, but if I were looking at the chart, I would see when price moves up and breaks above this zone and the recent high, I would have entered a long up here like this, and I would have taken my target within the ADR high. The ADR is around 150. Take 15 and 15 times 5 or 6, 900. 900 is not possible. 750. Yeah, 750 is possible. This would be how the trade looked like. And this shows me now that, okay, if we move lower from here, we are outside of the ADR low. So we cannot expect the price to reach this target. So we need to have a lower risk to reward. So if we then take 600 here instead, 600, then we have a 1 to 4, but we reduce the amount of possible changes in direction, because each position that changes direction will get increased slightly more than if you have a higher risk to reward than 1 to 4. But this is a viable trade, absolutely. So if we trade this, I don't know now. Yeah, now we move forward. Now it would have been a perfect entry as well. And this is what I'm waiting for. We see here, we have a consolidation here, and we have clean air to the left, and we're expecting momentum in the market because London Open. And this is exactly what we see. We see the London Open. But if it's a fake up and it moves down, we can win the trade anyway. So this is basically what I do every morning on any pair, and in the afternoon at 2 o'clock I look at gold, I look at Euro USD, because Euro and USD, it goes from London to New York, so it can. I try to start looking at those kind of pairs that have the overlap in sessions, but I don't only look at that. I mean, I look at every pair, but most often these kind of pairs that overlap in the sessions have a tendency to move more. But whatever you see is moving and getting out from a consolidation zone, it's perfect. Just jump on. And if you see that the price starts moving up and then it moves down, and you open the second position, and then it moves up again and it goes like this, then you're probably at break even. Close the trade if you don't see the momentum moving forward, because it's better to wait for trades like this, which is picture perfect, and use the hedge strategy to get out of your trades when you're wrong. So that's exactly what I do. I don't just open my trades, fire and forget, and come back and have lost 2% or gained 1%. Because I think it's stupid to, when I often have a gut feeling that, no, this is not moving. We have no volume here. There is something wrong. We are not going to move. Then I look to get out the break even or even a little loss sometimes. Because I don't want to lose 2% just because I'm stubborn to sit in the trade. So use the hedge strategy to get out a little loss, break even, or let it run to profit. It's your decision. But how I do it, I use it to cover up for my loss. Instead of just hitting the stop loss and moving on to the next trade, I commit more to each trade by using 2% risk, 1% target, which is twice the risk compared to the target. But I very rarely use 2%. It depends on how the markets move. And this has come with practice. I mean, the best part I've learned is to use the volume and the time of day. So when markets open, London open, New York open, I find it that I most often go straight to profit or change direction one time because it's a fake out and then go to profit. And it all depends on how it moves. If it moves slowly up and down, even though I'm on second position, I'm looking to get out. But if it goes up and then fast down, change direction and keep moving, then I will sit in the trade a little bit longer and see if I can make a full profit or a half profit or yeah, whatever. So I don't use it in as a fire forget. I use it as a tool. If I'm wrong, I use the hedging to get out from the trades without losing money. Absolutely fantastic. And this is one of the best ways I've ever traded. In the beginning, I let every trade run to full loss. And I also had like 4.5% loss and 1% target, which was stupid because one loss, it took me like 4 trades to just get back. So now I just try to get out if I'm not correct. And you can use this with any strategy you have. Maybe you have another strategy, support resistance or trend lines or whatever. When you expect the price to bounce from the trend line, you enter a buy. But if it breaks the trend line, you have a hedge. So you enter a sell and you follow it down instead. I mean, you can use it in so many ways. But this is the way I find best. London open, New York open, breaking recent highs, clean air to the left. That has been the best way for me to trade. Peace.